Bitcoin and Ethereum are climbing fast, almost back to their all-time highs, but what's really driving this comeback? Is it just hype or is it something much bigger? I'm Brett at CryptoGX, and in this video, I'll break down what's pushing Bitcoin and Ethereum near record levels, from new ETFs and AI boom to market psychology and what comes next. Stick around to the end because I'll share a simple checklist to anyone so that you can follow along and ride the wave without getting wrecked. Bitcoin and Ethereum are once again stealing the spotlight. Bitcoin is hovering near its all-time high of around $125,000. Ethereum isn't far from its 2021 peak of $4,800 as well. As you can see right here, it's at $4,483. In the past month, it was, up to about $4,800. So it's getting close. It had a little bit of a dip here and we're moving in the right direction. Now, a lot of this excitement comes from one big theme, which is confidence. Investors are starting to believe this bull run is just beginning. And if you're not familiar, a bull run simply means prices go up for months, not just days. Think of it like a long summer after a cold winter. Prices rise, new investors join, and then momentum just feeds into itself. One of the biggest reasons Bitcoin is booming again is the approval of spot Bitcoin ETFs. These are exchange traded funds that hold actual Bitcoin. They're not just paper contracts. An ETF is like a basket of assets that you can buy on the stock market or at least through a brokerage. Instead of buying Bitcoin directly, people can buy ETF shares through regular brokerage apps. This makes crypto more accessible to traditional investors, the ones that, have their retirement account fully available. They have the big money. Billions of dollars have flowed into these ETFs since they launched. Now, Ethereum followed after Bitcoin. The SEC approved spot Ethereum ETFs in 2024, and there were tons and tons of inflows after that, and more inflows mean a higher price. Now, there's also some magic with Bitcoin. Every 4 years, Bitcoin goes through a halving. This is a built-in event that cuts the reward that miners get for creating new Bitcoin in half. This basically means that there are fewer new coins entering circulation, which usually pushes the price up as the supply drops. Imagine a farm suddenly growing half as many apples. The prices are going to rise because people are going to still want apples, and the farmer is also going to want to be making just as much money. And as you can see from this chart right here, the halving was here in 2024, and there have been a massive price increase ever since then, from about $60,000, $70,000 all the way up to about $120,000. And this happens time and time again. These green markers are the beginning where it goes to halving to the peak, halving to peak, and so on and so forth. Another factor in this cycle is that AI stocks are pumping, and that's helping crypto a lot. Big tech companies like Nvidia and Microsoft are pouring billions into AI hardware and cloud systems. That optimism spills over into digital assets. Now, why does that happen? Well, it's because AI and blockchain are starting to overlap. There are projects that are launching AI-powered blockchains that handle massive data, or they train AI models on decentralized networks. Investors see crypto as part of the same future tech movement, not just digital money, but also kind of like the backbone of smart machines and digital ownership. Now, there's clear signs of a bull run and have been for quite some time. Based on daily trading volumes, when they rise, that is a very clear sign. New wallets are being created fast as well. Retail investors are coming back or, really being strong. Now, you can see that based on the Bitcoin trading volumes over the last 30 days, we are in an uptrend here, which is obviously good for Bitcoin. Now, unlike past bull runs, this one is being led by institutions, not just retail traders chasing memes. There are pension funds, hedge funds, and corporations that are buying through ETFs. Basically, the big money's come into play. Now, crypto is also finally getting some real-world use again. We have things like stablecoin payments, we have tokenized assets, and even gaming. And these things add utility, which go beyond speculation and more to real intrinsic value. Now, also global inflation, it's kind of up and down, but in general, over time, I would say the average is kind of cooling down. Interest rates are steadying. We're actually gonna expect an interest rate cut here pretty soon as well. And then tech optimism is somewhat back compared to what it was before. All of this creates the perfect storm for risky assets like crypto to shine, or at least an opportunity for it rather than maybe the perfect storm. Now, like I said, it might not be the perfect storm. Regulatory risks are also a potential problem here. Governments can tighten rules or limit exchange access at any time. We've got the Genius Act that went into law, and that has some things that are helpful for crypto, but obviously these kind of bills and acts can be changed and amended and all sorts of things all the time. Crypto is also incredibly volatile. Prices can drop 20 to 30% overnight. That's normal for the market, but it's scary for new investors. And you can see the volatility index right here. It is somewhat low when it comes to the year as a whole, but in general, it's much more volatile than the regular stock market and other assets. The good thing about Bitcoin is that you can see over time there's a trend of volatility going down, which is great for all those investors who say that Bitcoin is going to zero. This is kind of proof that it's not, in a certain sense at least. Now, you should also watch out for altcoins. Any crypto that isn't Bitcoin. Many of them pump really hard during bull runs, but they crash even harder later. So just keep an eye out. Now, if you're new, set your start really small. Set some predetermined rules for what you want your profile to look like or your portfolio to look like. Pick your core. This should be Bitcoin and Ethereum. They're the safest and the most proven. Then add satellites. These are small coins that you believe in long term, but only use 10 to 20% of your portfolio for these. Next, make sure to DCA or dollar cost average. This means buy the same dollar amount each week or month. It smooths out the price swings and really just helps you long term when it comes to growth. And also make sure to rebalance when prices move. If one coin doubles, sell some and spread it back evenly across your portfolio. This will help you protect profit. And I've got a video on the channel I recommend you check out for helping you set up your own portfolio using some AI tools to basically give you your own preferences based on your own risk profile. Using this method is going to keep you over time having steady growth. Now, Bitcoin and Ethereum surge isn't random. It's the result of ETF demand, the halving cycles, AI optimism, renewed trust in crypto's long-term role in tech. But my take on this is really the bull run is now fully in effect. We're getting kind of a second wind here, and the smart investors are going to move with a plan and come out on top. And I think with videos like this, you are going to be much more ahead of the game than most people. Now, if you're ready to get some crypto of your own, I put links in the description for Coinbase and crypto.com where you'll get at least $50 in crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed this video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.